Okay, we are back for economic data coming out in the next 20 minutes. Going to be really interesting here to see what the retail sales come in at and what the market is going to do. Our market isn't even doing too well right now, honestly, so we shall wait and see, I guess, as we go. Let's see, though. If you're new to the channel, feel free to welcome on in. Again, I got some nice mellow music playing here because this market is absolutely wild out here. Just trying to get this posted out here first. There we go. Crazy times for where we're at right now. This economy has got me whiplashed over here, all over the place. Like, I don't know what to do in this case. So, we shall see. If you're new to the Fish Financials family, welcome on in here. Let's chill Wednesday morning. Welcome on in to people that are just joining in. Again, we'll be going over the economic data. We got big, important data coming out in like 20 minutes. It's very exciting. Jason, good morning, man. How are you? Welcome. As you guys are tuning in here and you're watching the videos here, or if you're playing this back afterwards, you can see I have my prediction for retail sales on the right-hand side. Not so good, dude. What's going on with you, man? How you doing? What's up? This market sucks. I already know that much. It's tough out here, man. Welcome in, guys. Good morning. If you're new to the stream here, come on in. We're going to be looking over retail sales coming out in about like 20 minutes or so here. We're going to look into the charts, look into the data, see how the market responds to it. Market is down right now. As you'll see over here, we got all the futures. Let me move this out of the way for you guys to see. Whoop. So we got futures that are down right now. Let me move Fish Financials over here too. Here we go. Much better. Feel free to subscribe if you're not already doing so. But thank you. Welcome on in. So again, futures are down right now. Dow is basically almost at even, which is crazy enough to me. But we got the markets that are opening right now in the next hour or so here. S&P is down. NASDAQ is down. We had news come out for NVIDIA having to pay $5.5 billion for exports to China. Absolutely crazy. Huge shock to the market here. And we have retail data coming out in the next like 18 minutes. And again, if you're tuning in, here is what my predictions are for the market and how it's going to respond. Feel free to, again, drop any questions you got down below. I'm more than happy to answer your questions as we're getting into this crazy times. The economy is absolutely just, I don't know, man. It's a crazy time that we're in right now in this economy. It's whiplash every single day. We're going here, we're going there, we're going all over the place here. So I have some mellow music playing for the morning here, and we're just gonna hopefully kind of mellow out and just hope for the best as we get some crazy data that comes in the next couple minutes. Very interesting. So if you take a look at my predictions that we got down here, so the predictions for the market, this is what I'm looking at. And after looking through all these different articles, news articles, viewpoints, perspectives of things, this is what my prediction is going to be for retail sales to come in here. Whoever to sub, thank you so much. I appreciate that. Dancy, thank you so much for subbing. I appreciate you, man. Absolutely, thank you guys so much for it. Here's what we're predicting here, and am I a financial advisor? No, of course not. But this is what I'm looking at right now in terms of retail sales. If you're new to the economic world, welcome on in. Once you go down the rabbit hole, you go down the rabbit hole forever. That's all I've been doing for the last, couple months, couple years. And you read into all these different pieces of information, and it gives you a lot of really important things to take a look at here. So we have retail sales here. So a big thing in our economy, and because as you might hear, you might see us talk about, is how the economy is moving, how it's changing, how things are moving, where's retail going, because retail is the big bulk of our GDP. Believe it or not, fun fact for you guys on a Wednesday morning, fun facts with Fridge Financials here. Retail sales and the consumer make up 70% of our GDP. And our GDP is our gross domestic product, which talks about how strong our economy is, how much we're buying, how much we're sending out, imports, exports. So the tariff news is a huge blow right now, and that's why we got markets all over the place with volatility right now as we go here. So retail sales is a huge indication as to where our economy is going. Are we thriving? Are we struggling? All those different things that are very, very important for our economy to move forward here. So a couple things that we're looking at here is retail sales and core retail sales. And if you're ever wondering, Fridge, what is the difference between the two of these here? Core retail sales takes out the volatile events, which is like automobiles. I think gasoline is another one's a huge one they take out of it. So core takes out those fluctuating values here. Again, if you're new to the stream, feel free to welcome on in, pop in. Good morning, good morning. Drop what you got in the chat. Any kind of questions that you have for me, feel free to drop them down in the chat. I'll answer any questions that you guys got for me as we got retail sales in the next 15 minutes coming out here. So retail sales, again, is talking about how the money's being spent, where the economy's going, how much we're spending, how much money is going out and being produced into the world. Because at the end of the day, the U.S. economy only thrives when the consumers are confident and they're spending and they're spending and they're spending, right? So retail sales, this data here is a very important factor to take a look at. I know Jerome Powell will be watching this very closely, I feel like. So we have retail sales and we have core. Now, the core one is the one that I think to me is the more important one. So as you can see, I made some notes about which ones I have over here on the right-hand side. I have 3 bullet points for the core. The regular retail sales, I put a point in there as a reference, but I don't think it really is going to matter as much. Core retail is very important because it excludes volatile purchases like automobiles, like gasoline, all that kind of stuff there. Here are my 3 predictions about what the market will do. We are expecting the core to come in at 0.4. And last month, it came in at an increase of 0.3%. If the core comes in at 0.3, which is a miss of 0.4, I don't think it's going to react much because it hasn't gone down. Coming in at 0.3 compared to last month being 0.3 means that we haven't gone down. So that's good. You know, the market's going to move how it's going to move at that point. The market might move more on the NVIDIA data information news that came out about them paying $5.5 billion in exports to China and all that kind of stuff like that. Maybe they do that. If it comes in below 0.3, so 0.2, 0.1, I think we hit a big push down in the market for stocks. Because now you're coming down from last month. Last month was 0.3. You come in at 0.2 or 0.1. I think it's going to be a huge shock to the market. And if it comes in above 0.3, so 0.4 expectations, or a little bit higher than that, I think we'll have a nice push to the upside in the market overall. Will it be enough to push the markets green compared to where we're at right now with the futures being down? That I don't know. But I think it's going to be a good push up to the positive direction if core comes in higher than expected. The thing to understand with retail sales is this is one of your driving factors of the economy. So it's a huge thing to watch here, you know. And the thing is also with this data here is you do have to take into it with a grain of salt is that they have a huge projection of 1.3%. Because a lot of people are expecting that everybody's front loading and buying into the market now, or buying into their products now. Everybody's expecting to buy up all their supplies, all their food, all the cars before tariffs fully go into effect. So that's kind of what people are thinking, that they're going to be front loading it. It's almost like if you remember back in the day when we had the pandemic and everyone was buying up toilet paper and stuff like that and restocking and stocking up on wherever they could. People might be front loading it here as well. Same thing. So that's why this is a huge number that we're sitting at right now. And how I feel about it, I don't really quite know. We'll only see. Only time will tell, of course, as we go through more and more. But that's why it's 1.3%. And what's interesting is that everybody's expecting a high number in retail sales to come from automobiles and automotive sales and everything else. And it makes sense because, believe it or not, I found this one article here. Subaru of America had their best ever sales month in the history of Subaru. The best sales month ever. So, and there's another one I saw about like Toyota had a really good sales month in March, stuff like that. So that's why everybody's expecting a huge prop up in automobiles and everything else. And that's what has this data point a lot higher at 1.3%. If it comes in below 1.3%, I still think we're going to have a push down in stocks because, again, like even with volatile things pushed into play and it still comes in below 1.3, I don't know. I don't think the market's going to like it really well here. So we got data coming out in like 10 minutes here. So before we look at data here, we look at the data points, we look into the research and everything else here. You guys drop any questions you have. If you're tuning in, thank you so much for watching on this Wednesday morning. We are on spring break right now, so Fridge Financials is taking the time to still educate, but to educate people in the finance world and not just math here. So welcome on in if you are new to the channel. I appreciate you guys all so much. If you have no idea who Fridge Financials is, you are going to get to know him pretty quick and in a good way, I would hope here. So feel free to drop a sub. Again, we're at 736. My goal for the year in January was 500, and we hit way above that. So then I pushed it to 1,000. So my goal is to hit 1,000 by the end of the year. So feel free again to share the stream with your loved ones, with your pets, with your friends, with your neighbor. You have no idea who he is. All that kind of good stuff as we're getting ready for this data here in about 10 minutes here. Again, I'm a little excited. It's going to be tough out here. So we talk about, retail sales. We're going to look at some articles here. So Barron's came out with this article here about retail sales can be strong, but the real test comes later on. And so a lot of things with these data points here that we talk about is tariffs aren't fully being shown yet in the economy. Tariffs just started off in March, but it was like steel tariffs. It was like those kind of ones. And the big ones came in like April 2nd, I believe it was, where we talked about everything and we saw how it worked and impacted everything as we saw how the market reacted to that one. So the data for May, June, and July, I feel like is going to be some important data. And now, since Trump pushed it back 90 days, I think even August data now is going to be interesting to take a look at here as we get farther and farther into the year here. Barron's talks about the same kind of idea. Uncertainty about the import taxes. What else is new? Again, looking at 1.3%. It's going to come out 8:30 in about 9 minutes here. So again, welcome to the stream, guys. If you're brand new to the channel, we're getting ready for economic data coming out in about 9 minutes here. The increase should reflect sharply higher auto sales, wrote a team of Goldman Sachs Economics on Sunday. Roughly 1.5 million cars were sold in March, according to the data, compared to 1.2 in February. And again, that's a huge thing to think about because people are front-loading. They're buying cars now because you buy a car now, you don't pay those fees, you don't pay those extra prices that people are pricing in now as a result here. So things to consider is that's what people are doing. They're buying up they're buying up cars now because tariffs go into play. It's a lot worse here. Welcome, guys, in. Thank you so much for tuning in to the channel. I know I keep saying it, but I do appreciate it. We're mellowing out here for the next 9 minutes before economic data comes out. And boy, oh boy, if you want to take a look at what Fridge Financials thinks, not financial advice, of course, take a look down in the right-hand corner there. Those are my predictions for how the market is going to react to retail sales. If we hit it, great. If not, obviously no one can predict the market. So again, automotive plays a huge part in that retail sales data. That's why it's pushed so high right now, and it's going to be a huge problem that we'll be looking at here. Stripping out auto sales and gasoline retail is projected to go up by 0.5. Oh, they say 0.5, but Bloomberg says 0.4. So who is correct? Again, tariff-related front-loading, just like, again, back in the days of COVID where people were front-loading up on toilet paper and you name it, and I could barely get toilet paper at that point and food and everything else of that nature. So he noted that Bank of America credit card data pointed to large gains in spending on clothing and home improvement, though sales were tepid in categories such as furniture and general merchandise. So again, maybe thinking about having a beat here potentially, according to Barron's. You've seen a large amount of spending in clothing and home improvement from Bank of America. That ain't too bad. This is also interesting. I don't know if you guys knew about this as well. A few other factors also may have boosted spending. Like the weather improved, making it more likely that people went shopping. How interesting is that? That could actually make a difference in the economy, is that the weather improves so people go out and buy. Never would have guessed it, but it makes sense to me, I guess. Households receive their tax refunds. The average refund is 3.5% higher than last year, according to the IRS data. Okay, interesting. With fear of recession intensifying, economists have closely tracked retail sales to gauge consumer demand. Consumer spending accounts for roughly 70% of the GDP, so a large pullback could weigh on the growth. And again, if you've been watching my content recently and seeing how I've been posting things out, again, there's a lot of fear about this recession that could be possibly coming up. Yeah, some people who are just like 100% there won't be one. And that's a very bold statement to make, saying 100% you will not have a recession, because even someone who is a statistician who does math and does calculations, we always say 99%, even 99.9. Don't ever say 100, right? So I don't know why they say 100% for it, but we shall see here. Again, I'm taking core data here with a grain of salt. Again, feel free to drop any questions you have down below in the chat. Welcome on in. If you're new to the stream, we have data coming out in about 6 minutes. Feel free to drop your questions you need in the chat here. I am more than happy to help you guys out, answer any questions. If you just want to do your predictions as well, or just drop what you come up with. Or if you see the data before I do, for whatever reason, feel free to let me know down in the comment section and like the live stream, because I like what I do here and I appreciate it. And again, feel free to subscribe to the channel if you've not already done so. I know I keep plugging that in. Fun times ahead. So again, taking this data here is going to be with a grain of salt for me personally. I don't really quite know what is going to be read for result of it. Here's, again, this is my expectations over here on the right-hand side that you'll see. Again, I'm thinking that core is the major movement here, because with core retail sales, it takes out the volatile periods of gasoline and car sales, so you get a real indication as to what the consumer is spending with. If this number comes in lower, we are going to have, I feel like, a rough day in the market. It's already rough with NVIDIA. It's already a rough one, but it's going to be even more rough as we go here. What I will do is, let me pull up. We're going to see how the market, let me pull up TradingView here. I want to see how the market's going to react to this data coming out here in the next 5 minutes here. So let's see what's going on here. I need extended hours, because I will be curious to see. Again, this right here, this little market sell-off right here was because NVIDIA has such a weight on the S&P 500. So when they had news that broke out, this is what I don't understand with the economy overall. Maybe that's just my perspective of things, is that they come out and they say, "Oh, we're gonna be having a lot of money from NVIDIA. NVIDIA's gonna start making chips. They're gonna start manufacturing in the U.S." And everyone was hyped about it. The market was up and da-da-da-da. And then after hours, it was like, oh, by the way, they're paying so much money here. Market seems more bullish trend than bearish. Adam, I would love to hear your insights on that one. Definitely let me know what you're seeing here, because, again, I would love it to be bullish for a lot of people. You know, if you are new to me and what I'm doing here, I am sitting on a lot of cash right now. I'm kind of just in and out of trades as we go here, so we'll kind of see how the market goes. I'm not overly convinced that we're out of the period that we're in right now. Our data has been showing so much other things that I have just not been confident with anything whatsoever here. So I would love to obviously hear your input, definitely, because I'm always loving to hear other people talk about things. So Adam, feel free to drop it, whatever you got down there. If you're new to the channel, drop your comments, questions, things you got. We got data in 3 minutes. I don't have a drum roll here. I have relaxing music because I'm all cash today. Adam, that's what I'm talking about, dude. I'm all cash too, dude. But we have a red day in the market. I'm selling options, taking some premiums in and out of trades. I did that on Monday. When the market opened, which was over here, market opened up here on this sell-off right here. I sold some cash secured puts right here, got a nice rebound here and cashed out, made like, a little over $100 in a matter of like a couple hours. So I was pretty happy with that one. Again, just being in and out of trades is what I'm looking for right now. I'm not looking at doing long-term investments right now because I feel like there's still room for the downside potentially. Maybe I'm wrong. Who knows here? But again, the data that I have seen so far, I have not seen anything that has been confident for me to want to deploy my cash back into the market and deploy it for a long period of time. I have stocks I want to buy into. I have had no indication as to where we're going here. Good morning, dropping in from Discord. What's up, dude? Welcome on in. Thank you so much. We got retail sales in about 2 minutes here. Fridge Financial's here to educate. Again, if you're in from Discord, obviously you know that I drop a lot of educational knowledge every single day. Retail sales couple minutes. I just mean the higher lows on the chart today, specifically that. But in this market, pre-market, yeah, that's true, Adam. I mean, dude, I think what it is that's really frustrating about this economy right now is that, like, any kind of post, tweet, truth.com thing that gets posted, it just flips the market on a dime. just flips it on a dime. You know, any news that comes out is going to flip it. That's why I'm trying to avoid like these smaller news things and like the rumors of tariffs here and negotiations there and all that kind of stuff. I'm just looking at the data like Jerome Powell does, right? Where's our economy going? How's unemployment doing? How is inflation doing? What are we doing to combat that kind of stuff? And that's what gives me that conviction. And that's why I have still been convinced now for about, I think I'm like my third week now. Of being on cash. Did I sell at the very top? Of course I didn't. I timed that one wrong. But I have not regretted it yet. Believe it or not. I've been totally cool that I've gotten 4% interest on my cash so far. Over the year, I'll be getting 4% if I kept it in there. So I'm collecting, a nice couple $100 a month while I'm sitting there back and waiting for data to give me a better indication of things. So that's kind of where I'm at right now. We got retail sales in less than a minute. Get your Robinhood accounts ready. Get your Webull accounts ready. Get ready to watch this market do something crazy. Or maybe not. This could be a whole letdown. The market is absolutely nothing. Who knows, right? Only time will tell. Let me make this a little bit smaller so you can take a look. Let's see if we get some kind of candle here. We always get these huge candles at the very, very beginning with a huge movement. So let's see what happens here. Again, if you're new to the video and you're watching this video afterwards, feel free to like the video and subscribe to the channel. We got 8:30 release. And let's see. This is a sad looking candle so far. Suspense. It's not really doing much right now. Well, let's take a look. Let me refresh Bloomberg. Let's see what comes in. If anybody else has a retail deal, drop it in the chat. I gotta filter all this stuff out here really quick for everybody. I hate how when I refresh it, I have to do this. Let's take a look. 0.5. Wow. Core retail comes in at 0.5. Retail month over month comes in at 1.4. So in my expertise, I wouldn't say expertise per se, but from my understanding, I'm thinking that we're going to have a green day. I'm thinking we're going to have a little bit of a rally up to the upside. I could be wrong. Welcome to the video if you're brand new, guys. Data just dropped. Core retail sales comes in at 0.5, which is a beat. Retail month over month comes in at 1.4%, which is also a beat. So again, I was thinking that if it comes in above 0.3, we have a good day. Comes in below 1.3, then we've been pushed down. Will it be enough to move the markets along with NVIDIA news? No. That's kind of depressing. I honestly would have thought it would have had a bigger move. But, maybe they're just like, at this point, they're taking data with a grain of salt. Because at the end of the day, the data that you're looking at here, the data that we do always look at is taken with a grain of salt. Because it's like, okay, well, now what? Now what do we do? Where do we go from here, right? Thank you so much for who just subbed here. Adam, thank you so much, man. I appreciate you. You are a real one. And I appreciate you dropping your questions in the chat and your comments and everything else. I really would have thought we would have had something big. Let's see. Up. Come on. Do something. If it just goes sideways, I'm gonna be really upset, honestly. Like I'm thinking it's gonna have a bigger move, honestly, to things because we come in at beats. We come in above expectations here. So my hope would be like, oh, we have a great day here. But we didn't get that like crazy candle that we all look for when data comes out here. So it is what it is. Let's see what the market does for the rest. Maybe it takes a minute to digest. Let's take a look and see what Yahoo posted about it. Nothing yet. No articles yet. You know why? Everybody's reading into it now. No problem. Adam, you're the best, man. Appreciate you so much. Thank you so much. I love talking finance, guys. So feel free to drop any questions you got. Subscribe to the channel. Whatever it is you need. Tell your family. Tell your dogs. Tell your parents. Tell your neighbor you hate. I don't really care. Spread the word. All right. Let me see if they wrote anything about it just yet. Nothing about... They're just talking about NVIDIA right now. So that's interesting. Are we not having a... I'm honestly... I'm kind of bummed out by that. Core came in at 0.5. Can we pull this up here? Let me pull this up. Retail sales. As you can see, I did a lot of Googling for things. I was looking back at like 2018 also because 2018 talks about... they don't even have it on here yet. What the heck? That's the census. Is that different? That's different. Welcome in, guys. Thank you guys so much for bearing with me as we wait for Freight train has to figure out this stupidity. Oh, here we go. April 16th. Let's take a look and see what's going on. Home Pounder would hit that 40 cap. That would be absolutely wild. Oh my god, look at the automotive one. Whew. Automotive is like, watch this. Maybe that's what it is, guys. I have no idea. Again, welcome in, guys. You're brand new to the channel here. Look at the automotive sales. Oh my god. That is wild. So total went up. Excluding auto. Ooh, that doesn't look too good. Look at that. That's like interesting. Very, very. Let's see what we can figure out here. What's going on here? So, advanced estimates of U.S. retail and food services sales for March 2025. We're up 1.4% from the previous month and up 4.6% from March 2024. And people say, "Oh my God, that's a huge jump." And I think someone made a very good point. They were like, if it goes up with inflation, like if inflation is like 4%, it only went up like 0.6 because obviously your spending goes up because it also goes up with inflation because prices go up. So I was like, oh, valid. So something to keep in mind about. Total sales, retail sales are up 1.4%. All right. Nothing else here. Survey description. Reliability of estimates. I don't really care about that as much. Resources. Where's the data? Oh, here we go. Let's see what's going on here. I want to know where the big... This is a lot of data to have to break down, obviously, for you guys here. I want to know where the big ones are. Motor vehicle, 4.9% change from 2024. Look at that huge jump in motor vehicle. Right there. 124 to 154. That is the highest. Well, not the highest. I wouldn't say the highest in the last couple of years, but that's a huge jump right there in your automotive and vehicles. Furniture is up, as they were predicting. Electronics were up, but electronics are down 1.9 from last year. Very interesting. Building supplies are up. Food and beverages up. Clothing is up, which is interesting. Okay. Nothing really like bad. Very interesting. Very, very interesting. If you're new to the channel, guys, welcome on in. Feel free to drop any questions you got down in the chat as we are looking at retail sales. The market do anything? It literally hasn't moved, like, at all, guys. Maybe the market was looking for like a huge beat, maybe. I don't know. But, I mean, they came in at core retail came in at 0.5, which is higher than 0.4. Regular retail came in 1.4, higher than 1.3. So people are thinking, like, our economy's still spending here. And that's kind of what Jerome Powell's going to... Oh, you know what it could be? Hang on. I wish I looked at this earlier. At least we'll start today. Will be interesting to see what happens. You know what it could be, though? Adam, 100%. It's that... And we also have Jerome Powell speaking at like 1:30 today. Yeah. This is a little bit higher than before. Make money, save money. Welcome on in. We're just looking at some important economic data coming in. Talk about rate cuts, rate predictions here, what the rates are going to be doing, all that kind of good stuff here. Welcome on in. Hope you enjoy the calming music here. If you're in the stock market game, markets are doing nothing. I really would have thought that we would have had... I honestly am very, very surprised. What was the volume? Do we even have any volume on this? No, not a lot of volume. Okay. I love that for us. This was like 81%, I think, or something like that before this morning. So you know what it could be? Markets aren't moving much because interest rates are less likely to be cut now, I feel like. What are we pricing in for interest rates right now? I love this tool, guys, by the way, so much. If you go on to the CME group and look at interest rate predictions, you can see where the interest rates are going to be priced in at and where they're going here. So by the end of this year, we're looking at 1, 2, 3, 4. I don't believe we're going to get 4 rate cuts this year. And that's just my 2 cents. I think 4 rate cuts is a little bit optimistic. I think the market's trying to get way too ahead of itself. I don't see 4 rate cuts coming. I see 2 to 3. I don't see 4. And because here's the thing, right? And this is the way to look at this and how you analyze it. Retail sales comes in better. Spending for the consumer is okay. It's doing good. It's doing great things, right? If spending is good and the economy is still quote-unquote thriving, Jerome Powell is going to be less likely to cut rates. And people always say, oh, we should be looking for an emergency rate cut. We need a rate cut. Give me a rate cut. Come on. Rate cut it in May. Rate cut it in May. Give me the rate cut. The rate cut is not going to be a good thing right now. If you cut rates right now or soon, that lets people borrow more money for cheaper to then put back into the economy to then push the economy even higher. And by pushing the economy even higher, it's also going to push inflation higher. And Jerome Powell's goal is to control inflation. If you start cutting rates now, even though spending is up still, inflation is still pretty okay, you cut rates, it might have a potential of skyrocketing inflation higher. And with tariffs also, could be a huge difference. So I think that's why this went up a little bit. Maybe that's why the market isn't reacting. It's reacting a little bit worse actually now. Wow. All right. Well, very, very interesting. Daddy Powell ain't cutting rates if there's any side. Yeah, of course. And that's the thing, right? And what I think what people understand, or what I understand, what I've learned so far, and I think what people sometimes don't understand is that, right? Fridge, first time here, and this is awesome. Thank you, man. Oh, dude, thank you so much, M Finance. I appreciate you so much. You guys are awesome. I appreciate this, guys. Again, hopefully over the summertime, because I'm on spring break right now, hopefully summertime, it's Fridge Financials live streams almost every day. Educational knowledge, dropping bangers, whatever it is you want to come up with. So yeah, Daddy Powell's not cutting rates. Not at all. You know, the way you'll see emergency rate cuts, in my opinion, is if the labor market sucks. Your labor market crashes and it flips over and unemployment shoots high. That's when you're going to see the emergency rate cuts to panic. That's how I'm looking at it. And we haven't had any other data that's proven that we deserve rate cuts, right? Inflation is still higher. Consumer spending, as we know, is still coming in pretty okay. There's no need for it. The big problem that we're facing now is stagflation, right? So stagflation basically is this really interesting tool that people hate so much. This is not really a tool, I guess, but it's more of just an economic, definition. Stagflation is when the economy slows down, so GDP slows down, unemployment is higher, and inflation stays around. The economy's not moving, but we have more people now working, and we have higher prices. And that's what happens, and that's why economies hate stagflation, because what happens? How do you combat stagflation? You're going to see rate cuts. Rate cuts put you into a deflationary period, potentially. So very, very interesting. Tesla, Palantir, NVIDIA, MACD, all dropping below single line. Oh, geez, Louise, yeah. Okay, I think the market is starting to react to it now. Very interesting. I honestly would have thought that this would have been. I thought I had a pretty good prediction here, but, I guess not. Hey, it is what it is. Just like Michael Burry always says, I can call a recession 14 times and hit it only once. I know that he did that, and he made a lot of money the one time he called it, but he says all the time that we're going down, and maybe we're not. Oh, man. Yahoo Finance came out with something. Let me take a look and see what they're saying here. And we'll go back into the data afterwards, see what Yahoo Finance comes in with. Retail sales surge 1.4%. And latest sign of the economy's strength before tariffs. And again, I think the thing to remember, guys, with this data here is that this is all pre-tariffs, right? This is March data. So wait till inflation or wait till tariffs are hitting full effect. There's a really, really interesting point that I found from one inflation data point last week, which was the producer price index. Steel was up like 7% month over month. What had tariffs in March, you ask, Fridge? Steel. 25% tariffs went in play in March. And you had a 7% price increase month over month. Absolutely crazy. All right, let's get into this, though. Let's talk present. Retail sales rose more. What is this sentence? Am I just illiterate? I don't think I am. Rose more 1.4%. Okay, whatever. Hey, I'm not a ground person, so maybe that's right. I have no idea. Matching forecasts and serving as a best reading over 2 years. Latest on the economy's resilience before this month's sweeping reciprocal tariff announcements. Headline retail sales rose 1.4% in March, matching economists' expectations and well above the 0.2% seen in February, according to the Census Bureau data. Hooray! The control group. The control group in Thursday's release. We're in Wednesday, guys. Yahoo Finance. Who wrote this? Josh Schaefer. Unbelievable, dude. Thursday's release. I can't believe it. Don't believe anything from Yahoo Finance. No, I'm just kidding. Obviously, I believe them. A lot of things I do like. Which excludes severe volatility. The GDP reading for the quarter rose 0.4. Oh. I missed that part. Hang on. Refresh. Let me see. Oh, crap. Bloomberg, if I'm on the United States and I hit refresh, why would I not want to be on the United States still? What are you doing? Wednesday. Oh, the control group comes in at a miss. What does that mean? So the control group, which excludes several volatile categories and factors into the GDP reading for the quarter, rose 0.4. Economists had 0.6. I didn't even factor in the control group. That's not even on here. That makes sense. Maybe that's why the market isn't liking it too much. Yep, maybe that's why the market's not liking it too much. That makes a lot of sense. Guys, drop any questions you got down in the chat. Say hi, good morning, welcome in. Happy Wednesday morning. Feel free, if you're not subscribed to the channel, click the little sub button. Costs $0.00, and it gives me 1% happiness. I appreciate it. Not actually, but metrics February rise was revised higher to 1.3 from a prior reading of 1%. March sales, excluding gas and auto, was 0.8, above the 0.6. The read comes amid fears the economy may be growing slower than Wall Street initially thought to start 2025, and that's before any negative impacts on liberty. Yeah, and that's before any of this. All right. So again, because this came out in April, the Liberation Day stuff. So. But a nice little jump there. That ain't too bad. But with President Donald Trump's tariffs pushing the effective U.S. tariff rate to its highest level in the century, economists widely expect the new policies to boost inflation and slow economic growth. Sound familiar? Sounds like fear. Sounds like stagflation. A possible recession. Oh no. I'm not trying to put fear in you guys, but this is what I'm seeing in cash right now. Like I don't like any of the data that comes out. The Fed has accomplished what many had thought was impossible. A recent strong jobs report and inflation hit the lowest level in 4 years. It has brought us to the brink of a soft landing. Now the tariffs change everything. That is true. Jerome Powell and the Fed, I feel like, were doing a really good job of controlling the inflation, and they were slowly starting to cut rates. Right? It was like, here's one rate cut, here's another rate cut, and they paused for a little bit. And now it was like tariff news, boop. Okay, that's out the window. Like, good Lord. So, very, very interesting data that we have here. Let me look back into this. Anything else that like catches my eye here? Let me see. Yeah, motor vehicle sales, huge jump there. Total comes in at 1.4 for everything. Originally 1.2. Originally 0.2. Anything that jumps out. Furniture is down 0.7, and it was revised to. So the R stands for revised. So they revise their data as they go. Building materials. People may be buying up things right now. Who really quite knows? Nothing. What else had? Gasoline prices are down. Makes sense. Gasoline goes down. Makes sense. Clothing is up. Interesting. Sports goods, hobby, and musical instruments. And bookstores. Up a lot. Interesting. Miscellaneous store retailers is down from 1.5 revised to 0.7. Interesting. All right. Huh. And this is talking about more of like their error and stuff like that. Revision month over month. Furnishing had a huge revision. That's interesting. Huh. Well, it is what it is. So, very interesting. So, as people are going to read into this more and more and more, the market's going to react more and more and more. I don't know if I refresh this to change the probability. Oh my God, it went from 83.2 to 83.9. Oh my God. Okay, that's why. Yep. This makes sense. Markets are coming down because, again, the markets want rate cuts, but they're not getting them. You're not getting a rate cut. There's no way. Not anytime soon, anyways. I want to almost go into like Robinhood and like buy the future, the derivative contract of rate cut in May probability, and say no rate cut. It's just not happening because if the spending is up and the economy is still spending money, why do you need to cut rates? I would be curious to know when they do the next revision for GDP also as well. Let me see. Is there anywhere else? Anything else that's important here? Crude oil, but I don't know why that's important, honestly. I think it's because of supply of oil and stuff like that. But again, oil is a huge indication for like recessions, I believe. Jerome Powell speaks at 1:15. Very specific time. Very interesting. Okay. What's Thursday? Initial jobless claims, that will be important. Manufacturing index, seems like a pretty important event as well. And then Friday is like nothing. When does Atlanta Fed? Oh, is this today? Oh, Atlanta Fed is going to revise their GDP. And so in case you guys aren't aware about how this works with GDP. And Atlanta Fed one, I'll pull it up for you guys because Atlanta Fed one is something to take with a grain of salt. I've learned this over the last couple months here. Atlanta Fed GDP, right? So when you have a negative GDP, that means your economy is slowing down and it's losing growth. You're not growing. You're actually like slowing down. You're compressing, right? The definition, the textbook definition of a recessionary period is 2 negative GDP quarters in a row, back to back. So if Q1 comes in negative, if Q2 also has a negative GDP, we are then considered to be in a recessionary period for everybody, right? This advertisement's annoying. Okay. So right now the Atlanta Fed has, they say, it's negative 2.8, but adjusting for gold, this is the more specific GDP adjustment here. They're looking at a negative 0.3 GDP. So being negative, again, if our GDP comes in at negative, that's going to put some fear in the economy. Hence why I'm not a fan of it. And that's why I'm getting out. Like, I'm out on cash right now. If you guys, full disclosure, if you're new to the channel and you're watching, I'm full cash. And a lot of people are like, Fridge, you're an idiot. And maybe you're right. Maybe Fridge Financials is an idiot. But obviously we had the huge 10% rally last Wednesday, which to me I still think is insider trading, or market manipulation at least, which is absolutely wild. But I'm pretty sure Donald Trump is getting sued, or the administration is getting sued for that stunt they pulled last week. If you guys didn't see the stunt from last week, oh my God, it was like, if this is not like the definition of insider trading, then I don't know what is, right? So right here, I'm gonna actually zoom in a little bit more for you guys, in case you guys want a little bit of an update on the economy from the last couple of weeks and how we've been doing here. Where was it? Oh, I went way too far back. Whoop. Let me go over to here. So right here, we had a 10% move in like one day, because he announced something on True Social about like it's a great day or something like that. He made some sort of like post online for it, and then they announced pausing tariffs at like 12 o'clock, and market took off up 10%. I sold off my positions like somewhere like over here, I think it was, or something like that. It was somewhere like over here. I think I sold it off. And then it was doing great. It was a great position. A great decision that we made. And then President Donald was like, hey, guys, tariff pause. The thing I don't understand with that one is that I think every day he's losing more credibility. And that's maybe my opinion on things. I'm not really a political person. But if you're gonna play the game of like I'm gonna hide my cards, like he basically this is my analogy as to what I think happened, right? He showed his hand way too fast. If his whole focus was negotiations, which I was like, you know what, fine, you want to negotiate. I respect it. But if you say that we're not going to do this, and then 2 days later you flip and say we are going to do it, like we're not going to pause tariffs. 2 days later, we're pausing tariffs. Like other countries are going to look at that and be like, this dude flipped so quick. How could they have expected anything different to happen after the Trump coin, right? That Trump coin, what is that even sitting at right now? It's probably not even anything close to being. Is it even on TradingView? I wonder. I'm going to guess this one. $7. Yeah, what was that? That was, this is the Trump coin fiasco. Right here. Oh, look at that. Gee, inauguration. Right around here. And then, pew, rug pull. I think his wife had one too. Melina, I think, also had a Trump had a token as well. It's so stupid. And then I don't know if you guys listened to, it's a nice George W. formation. Yes, it is. I don't know if you guys saw yesterday, but they were talking about the press secretary was talking, and they're looking at trying to potentially ban Congress from trading stocks. And I was like, isn't that kind of ironic that he wants looking at banning? But look at the two things that happened. We have the Trump issue with the Trump crypto that happened, as Adam says. And then we also have this idea of now we had that huge 10% rally midday. I don't know, man. I don't know. But he wants to ban he wants to ban Congress from trading. Makes sense. I also think they should do that, but it's just me. Any other news in the market going on right now here? Retail sales. Everybody's talking about retail sales now. Stock. You know what? You know what it could be also? This whole idea right here is just probably out the window. And the reason probably why, and I didn't even think about this, I'm just going to hide this so I don't look stupid anymore. The reason why it's out the window is because I think people are reading this up and being like, people are stockpiling for a reason. People are afraid. And there was other things I looked at recently. What was the other thing I pulled up recently here? Because we got a half hour till market open, guys. Whoop, whoop. New York Fed. This was really interesting here. So the Fed Reserve dropped out this data here. And again, Jerome Powell, Big Daddy Powell, is just like, this is soft data, guys. This isn't hard data. This is expectations. It's soft data. And that's all fine and dandy. But to me, I think the Michigan consumer expectations, we have a New York Fed expectations. Take a look at what's written here. And I'll zoom in because your boy's got glasses also for a reason. Median inflation expectations increased by 0.5% to 3.6 at the 1 year ahead horizon here. Johnny Ron, stockpiling ammo. It's crazy, man, out here. I don't know. I'm not a huge fan. So median inflation expectations increased by 0.5% to 3.6 for the 1 year horizon, aka people are afraid of inflation coming in. For the 3 year, it didn't change, and then for the 5 year, it went down 0.1. That makes sense. Consumers' year-ahead expectations about their household financial situations deteriorated in March, with the share of households expecting a worse financial situation 1 year from now rising to 30%, the highest level since October of 2023. People are scared. Pokemon card sales alone are enough to make us beat expectations. That is very, very true, Adam. I completely agree. Worse financial situation 1 year from now. People are scared. And people say, oh, well, buy when others are fearful. Of course. Then I'm not going to say no to that. But, dude, this is fear of a high level. This is crazy. They're going to be in a worse financial situation 1 year from now with tariff implications and everything. Inflation staying around, unemployment. Oh, look, unemployment stuff. Mean unemployment expectations, or the mean probability that the U.S. unemployment rate will be higher 1 year from now, jumped by 4.6 points to 44% in March, the highest reading since April of 2020. If you guys can guess, April of 2020, COVID-19 era. The mean probability that the U.S. unemployment rate will be higher 1 year from now. So unemployment will go higher. The probability now for people that did the survey is 44%, jumping 4.6 percent points. The mean perceived probability of losing one's job in the next 12 months increased by 1.6 points to 15.7%, the highest since March of 2024. People are afraid, guys. And that's where I think that, like, it doesn't, like, this is the data that we're looking at here. And I know Jerome Powell's like, oh, it's soft data, but, like, let me zoom out here a little bit. Look at this. Look at that nice little uptick. Look at that. Here's inflation of 2022, where we had the rate hikes happening here. This is all your rate hikes happening in the 2022 era. And then, okay, starting to kind of come down a little more, and then boom, tariffs. December, we're looking at what? January 2025 was at 3%. Now it's 3.6. Huge jump up in inflation. Uncertainties up a little bit. Labor market. Look at this jump of higher unemployment probability. Oh, look. COVID-19. Economic shutdown right there. Unbelievable. And again, this obviously is taken with a grain of salt, right? All of economic data is with a grain of salt here, right? It's based on surveys and who's responding to them and who's involved and who's not involved and all that kind of stuff there. It's all there, right? But it's just more things to consider. Like, and if you sit there and say, Fridge, I'm bullish for the market for the whole year, please, for the life of me, and nobody has shown me something otherwise yet, I just want to know what is a reason as to why. And I would genuinely love the reason why we should be bullish for the rest of the year. Here's another thing that I found yesterday. Look at this. Gog, I'm such an idiot. Market predictions. I found it. I want to see if I can find this on here for you guys. Take a look at this. It came out like recently too. Can I find it anywhere? It was literally from Yahoo Finance. Was it here? I just want the nice pretty chart, guys, for you. Where's the chart? Can I have the chart? Give me the pretty chart. No, there's no chart. All right, let me do this. Please pause. Pull up Discord really quick, because that is where I posted it. To the kingdom. If you're part of it, awesome. If you're not, feel free to join if you would like to. Do I not? Oh my god, I don't have it on Discord either. Oh my god, where is this chart, dude? I need to find it. It's on Instagram. Should I go on Instagram maybe? Let me see. Should I go on Instagram and find the Yahoo Finance page on Instagram? I gotta log in. I don't feel like logging in. Oh my god. They had a revision of everything, and it was. Is it this? No, that was the old one. Where is the new one? Let me go on my thing real quick. I'm gonna find this. I will find this. Let's take a look at the charts here. Charts are awful. We're losing money. Woo! Dang, losing money. All right. Where? Again, if you're tuning in, thank you so much for coming on by. Feel free to like the video. Subscribe, bullish, hopium. Yeah, Johnny Rod, not 100%. I have not, and you know what it is? Like, this is what I mean, right? And I'll tell you guys right now, since we have nothing better to do until the market opens, I am such a nice guy. Let me see if I can figure out this. Oh, hey, look. Fridge Financials. Where was it? Take a look at all this. Look at all this content here, guys. Woo! Killing it. Thank you guys so much for watching, by the way. I appreciate you all very, very much. And whether you know it or not. This right here. Read this. Okay? Don't shut up, Fridge. Shut your mouth. Shut your mouth. Look at this. This is why I don't time the market. This video did not age well. Like, all these comments, and I'm honestly very, very nice in these videos. I'm just like, hey, thank you. Thank you so much for your opinion. Thank you for your comment. But, like, nobody has given me, like, there's no data here that backs this up. When the VIX is 50, you should be buying, not selling. And that's also not true, because the VIX could be above 50 for weeks, months, even a year, possibly. People we're just like, this guy was like, I'm in cash. And I was like, oh, thank God. So, oh, there's Johnny Ryan. Hey, Johnny Ryan. I didn't mean to put you on the spot here, but I appreciate you, buddy. Thank you so much. And if you are on this one, thank you. But again, some people are writing so many things about just being like, people were just sitting there just being like, oh, average. Like, people are so, like, just messed up on here sometimes. And it's like, it's what happens with social media. But I'm just like, nobody, you're a clown. Stick to the bonds, buddy. You ain't ready. Of course, But, like, nobody has given me any data to prove otherwise. Like, show me one data point in the economy right now that our economy is amazing and that we shouldn't be fearful of a slowdown, of a recession. Like, show me one data point. So this dude said delete the video, and I was just like, thank you for watching. I'm unfortunately not going to delete the video, and I'll be first to wear this loss on my sleeve and be open if anyone down the road has, and be open with everyone if down the road this is a bad idea. I unfortunately will not be deleting this video. Thank you for that. Okay, so I thought that was just really interesting because I was like, yeah, like I mean, I've been now. I sold a little while beforehand. I made this video a little while beforehand, but yeah, I got a lot of views. But people were just like talking so much about it and be like, oh, it's just a bad idea, such a bad idea. And I was like, is it though? I don't really know. Oh my god, I have it on my phone. What the heck? Wall Street forecast. It was April 14th this came out. Please, for the love of goodness gracious, let me find this chart for you guys. Wall Street forecast. Yahoo Finance. I would love to find this. That's indices. Nope. Come on. I don't think it's here. It's not. Oh, yep. Oh, what the heck? Nope. Look at this. Okay, finally, Fridge Financials figured it out. Look at this. This is what they were at in December of 2024. They were predicting all these banks here. We're like, yeah, we're pushing these higher values here. And you have some banks who are just like, whatever. But Wells Fargo, I don't care. Wells Fargo's annoying, so I don't really care about Wells Fargo. But, like, look at this. JP Morgan, a huge revision. Royal Bank of Canada, huge revision. Bank of America, Goldman Sachs, Citi, Barclays, Oppenheimer. Like, major Wall Street is saying, nope. They're looking at a down period, right? And the fact that, again, all these revisions are happening to the economy, like, everyone was bullish for the year, right? 100%, Adam. Recessions make millionaires. That's why I'm sitting there. Like, I'm not sitting there. Like, I don't see this as a buy the dip opportunity. If I did, I would have bought the dip so much, right? I actually did the opposite. I sold out. I went off margin, and I'm sitting on cash right now because I don't see any positives right now. And I think it shows, look at all these revisions. It's not just like one or two banks. It's what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 out of 14 banks revised lower. And it's not just like a quick drop, like 65 to 52 for the S&P 500. 7,000 to 6,100. You went from, so that's 7,000 down to, is that 6,000. So huge revisions, guys. I'm not a fan of that. Like, there's no, and we don't know what's going on right now. And, and this market is just doing amazing in the red right now. Absolutely wild. I don't want to open up my Chatgpt one because that one's going to be a sad pain right now. Let me see. All right, so 83.9. If we revise this, where's it going to go, do you think? I think it's going to be over 84. Oh, no, it stayed the same. It went from 89.3 before it was 89, or it went from 83.9 before it was like 83.2. So, rate cuts, not happening in May, guys. Hate to say it. We're still pricing in 4 rate cuts, though, which is crazy to me. I don't think we're going to get 4 rate cuts. Unless, again, the economy takes a huge downturn. The only reason that we get 4 rate cuts, in my opinion, is if we have a panic emergency downfall and Jerome Powell has to jump in and cut rates. And he said it before, time and time again. I'm going to sit back and wait until I think I am ready to go. But, to each their own. Anything else going on right now in the economy? Lift, no. China opened the talks if they show respect. That's crazy. Also, China said like, oh, you can't export. I think it's like the mail from China to the U.S. Something like that, or vice versa. I forgot what it was, but absolutely crazy. California's Gavin Newsom says state will sue over Trump tariffs. Big banks say the sky is not falling yet. Oh, what's Nvidia at now? What's Nvidia at now? Down 5%. I'm probably gonna sell some stocks here. I predicted we get a cut in May on Robinhood. Oh, yeah, but Johnny, honestly, like that's not even a bad one because what is that priced at right now? As long as you didn't full pour it and put like $13,000 into it or whatever, which I doubt you did. A cut would be it's 5 cents to pay out 95, so you would make a lot of money on that one. That'd be a huge return. So it's like 100 and it'd be like 19xing your money on that one, which I think is fine. I wouldn't mind dabbling in it. Oh no, wait, no, it's 16 now. Oh, sorry, it's 16%. It's 16 cents. So a cut bigger than 25 is 5 cents on the Robinhood derivatives predictions there. Yeah, I really don't see. I don't have any indication as to why we would do that, but that's just me. Again, if you have anything that you can provide for it, feel free. Nope, it's like 10. Oh, okay, yeah, Johnny, it's fine. $10. You can sell a you can buy a stock option and make that money back in no time. Like I wouldn't worry about it. Oh, Nvidia's coming down even a little bit more. Ooh. So yeah, so that data is very, very interesting, right? New York Fed again, obviously. Teach their own. You also have University of Michigan, who has similar feelings of things, right? Consumer sentiment at the lowest point ever. Keeps going down. Economic conditions, awful. Expectations, even worse. This chart right here is a really good chart as well, if you want to look at it. Look at this. Share of consumers expecting rising unemployment up 5 straight months. 67%. But it's okay though. Daddy Trump's got us. What people will think. I don't see it. I fail to see it. And again, if you could find it, please tell me. Was there anything else in the Michigan report? I don't even know. Let me take a look. University of Michigan. Again, this is all soft data from Jerome Powell, as he says. But I don't know about that one. Let me see here. Market's open in like 18 minutes. Consumers report multiple warning signs that raise the risk of a recession. Expectations for conditions, personal finances, incomes, inflation, and labor markets all continue to deteriorate this month. If you want to look at red flag, I'm waving the red flag here right now. The share of consumer expectation on unemployment to rise in the year ahead increased for a 5th straight month. Year ahead inflation expectations are from 5% to 6.7%. Highest since 1981. And this was before. They say it here somewhere, I thought. I mean, they didn't say it here. Oh, right here. This was before the reversal that happened. So, I don't know. I honestly don't know what to expect, guys. Like, I can't see anything positive happening. Nvidia's down. I'm going to sell options on Nvidia probably at some point. I don't know when for today. Take some cash. So I'm going to deploy my cash, but I can close it out whenever I need to and just get in and out really quick. No big deal for me. So that's GDP. This market, guys, is absolutely wild. If you've been watching here for the longest time, thank you guys so much. I do appreciate you every single second, every time that you're here. You give me any kind of watch time. I appreciate you so much. And again, feel free to like the video, subscribe as you always do, turn on the notifications, because Fridge Financials drops absolute knowledge bangers every day, when possible. Ooh, this seems like a fun article. WTO slashes 2025 trade growth forecast, warns of deeper slump. Oh. The World Trade Organization. I was wondering, what the heck does WTO stand for? Fridge, think. Think, Fridge, think. Come on. The World Trade Organization sharply cut its forecast for global merchandise trade from solid growth to a decline on Wednesday, saying further U.S. tariffs and spillover effects could lead to the heaviest slump since the height of the COVID pandemic. That's awesome. Said it expected trading goods to fall by 0.2% this year, down from its expectation in October of 3.0% expansion. Oh my God. U.S. President Donald Trump imposed extra duties on steel and car imports, as well as more sweeping global tariffs before unexpectedly pausing higher duties on a dozen economies. History with China has also intensified, with tit-for-tat exchanges pushing levies on each other's imported beyond 100%. Tit-for-tat. I love how they say that. The World Trade Organization said that if Trump reintroduced the full rates of his broader tariffs, that would reduce goods trade growth by 0.6, with another 0.8 cut due to spillover effects beyond U.S.-linked trade. Taken together, this would lead to a 1.5% decline, the steepest drop since 2020. Modest recovery in 2026. Hooray! Yay! Oh my God, dude. The UN Trade and Development Agency said global economic growth could slow to 2.3% as trade tensions and uncertainty drive a recessionary trend. Recessionary trend. Commercial sales trade by well below the baseline projections. Okay, that's awesome. But don't worry, guys, we're good. Oh, look, 7 ways to recession-proof your savings. Thanks, Yahoo Finance. Like, guys, I'm struggling here to see this. There's another thing that came out recently. Where was it? It was, let me go back to good old Google here. U.S. credit rating cut potential. There's an article that came out about the, right here. Potential U.S. credit downgrade looms amid fiscal challenges. The United States faces a potential downgrade in its credit rating as concerns mount over its fiscal health, political gridlock, and rising debt levels. According to a report by S&P Global Ratings, the U.S. credit rating currently at AA+ could be lowered if certain fiscal conditions worsen. This comes amidst a backdrop of a damaging trade war, a volatile stock market, and a global sell-off of U.S. assets. So if you remember, like way back in 2023, Fitch did it. Oh, look, they already talked about it. Fitch downgraded the U.S. economy from AAA to AA+, right? It's just like when you have a credit hit on your own credit report, but it's for the U.S. economy here. And when we had this credit hit, we were down 1.6% in that month. The stock market was. So another downgrade? I don't know, man. Could make it even worse. All right, where's the market at? Still going down. I should, like, in the future, like, have, like, the Flow write a song. Like, it's going down for real. It's going down a lot. I look at things every day, and I look at it, I'm just like, you know what? I am happy I'm still in cash, because, honestly, like, this just has not helped me, like, understand anything at all. Let me go back to you. And if you have any questions in the chat, feel free to reach out and let me know. If you want me to look at any kind of stocks, ticker symbols, you name it. We're kind of waiting for market open in about 12 minutes or so. What is this saying? As we're waiting for the market open here. Pause this. Big banks are offering the latest view. It's not all bad, at least for now. 5 of the country's largest banks over the past week posted first quarter rises in profits and revenue, driven in part by trading operations that benefit from market volatility from Trump's tariffs in February and March. Okay. Here are the profits. Many banks said their consumer customers were still spending, defaults were still manageable, and businesses were not experiencing distress despite the uncertainty about the months ahead. Yeah, but again, we're not. I would love to see what banks are looking like Q2 for earnings. None of the institutions with big Wall Street footprints updated their earnings outlooks for the rest of the year either. Of course they didn't. Why wouldn't? Why would you, right? Oh yeah, look at, they all had beats on there. They all did amazing in trading, but the investment side, miss, and a miss from Goldman and from Bank of America. So we got 10 minutes to the market open. Again, welcome in if you're watching this video or if you're playing this back afterwards. Thank you so much for taking the time to watch it. We had data that just did not do justice. And it is what it is. We try to predict it, and it happens. Hopefully my VIX call prints. Yeah, John, I have some good options as well. Let me do this. Let me pull up my Robinhood account right now. Robinhood. Where is my phone? So I gotta do the 2-factor. Oh, let me pull it up here for you guys first. It's gonna take me about like 5 minutes or so. So again, feel free to drop any questions you got down in the chat. I have like hedges in both directions. So that way market goes up, I make money. Market goes down, we make money. All that kind of good stuff. Let's see here what happens. Yes, it's me. How to do the authentication. Let's pull up the Robinhood. All right. All right, so that's where we're at right now. Robinhood portfolio, if you're taking a look at it. These are going to print, which is going to be great. These put spreads here, definitely going to print. I opened these up yesterday in Discord. Bought each one of these for $39, and they're going to hopefully seem like they're going to be opening in green because they're in the money, which is amazing for me with the market being red here. And I opened up a Google put here just because, you know, and this is kind of what my logic was, right? So if you're new here to how I do options trading and stuff like that, as you'll see, I do have a lot of cash still. Like my positions, I have like 100 shares of crypto for BTO ETF, which is dividend payouts. AGNC, same thing. These are all dividend paying companies. Like I kept those in. That's not going to matter for me. But I opened up this Google cash secured put right here because the idea behind it was that if the market took the news and went green, this would have made money while this would have lost money. So the Google selling cash secured put is almost like a hedge for me. The good thing is with this is that I could just roll it down lower and hope for the best. I have a VIX call, as you can see here, also Johnny Rotten, and you'll see it's a nice little credit debit spread here. What's the VIX at right now? It's only at 32. Well, that one's not going to print as much probably, but who knows? So this is the portfolio we're looking at right now. Again, as you can see, mostly cash. I've made $31 this month already in cash just by having it in the sweep for Robinhood Gold with a 4%. I still have $30,000 sitting right now in buying power in cash because not a lot of it's tied up right now. Like only 20,000 is in collateral right now for options. But again, this allows me, when my money's in the options, I can just get in and out of the trades really quick. Close it for profit, close it for loss, whatever the case is going to be. I have some covered calls here for agency and BTO, which is going to give me some money as well. These ones are just like, I've been in these two contracts for the longest time, and I just pushed them out to like 2027. So they're just like long leap cash secured puts. So that way, you know, if I want to get into Coinbase's leveraged ETF, I'll get in at a lower price. SOXL, same thing. This is probably going to open. Yeah, this one's going to be down a little bit today. Oh, not bad, though. So we'll see. So, this doesn't, again, I haven't really moved much. Haven't really moved much the longest time here. Again, this is where I kind of like went like cash. Again, did I buy on the bad day? Did I sell on the bad day? Probably I did, but you know, it is what it is. I'm still not going to bed like tired at night and like worried about my portfolio and stuff like that. So we shall wait and see what happens with these accounts here. We got 7 minutes till the market opens. Let's see what Nvidia's looking like. Nvidia. Jeez, down 7%. I'm going to sell options on Nvidia. Thank God I still have some cash to deploy because this is going to be premiums are going to be juiced for Nvidia. Juiced premiums. Again, if you're new to this video, welcome on in. It's a long video, I know, but hopefully you guys enjoy the time here and talk about data and everything else and looking at what's going to happen here, how things are doing, where we're going, the Fridge Financials portfolio, and kind of where we're at right now. Bitcoin is actually staying pretty high right now. I'm actually kind of impressed. 6 minutes till the market opens. Enjoy the nice elevator music as we get ready for market open here. It's going to be a great morning. Top of the morning. And again, if you're new to the video, feel free to like the video. Subscribe. Drop your questions in the chat. Let's watch the market open and see what happens. This I'll probably close. This I won't do anything with yet. And I'll probably look at going into Nvidia a little bit. What are the... Let me get rid of this. All right, get out of here. I want to look at the top 100, but we can see what's moving and not. Oh, here we go. 100 most popular. Let's see what's down right now. AMD is down. Nvidia is down. Micron, Neo, Robinhood's down 5%. Broadcom's down 4%. I was in and out of Broadcom in a couple minutes the other day, which is really nice. Not a couple minutes, a couple hours. I should say Peloton, SoundHound, Shopify, Coinbase. Tesla's down. Don't want to look at that one anymore. Oh, look at that. Trump Media's down. Shocker. Welcome in, guys. If you're brand new, we're getting ready for market open. I got about 4 minutes. Here's the Fridge Financials portfolio. We're going to see what happens. Feel free to like the video, subscribe to the channel, turn on those notifications if you need to. Drop any comments you got down below. Let's see what the market does. A little bit of a bounce. All right. So these I paid, what did I pay for these? 3 of these at, I think I paid 120. Paid 117 for these. And I'm going to be up about $60 on them. So looking at about 50% return, which would be pretty good if I can get in and out of this and get filled. We shall see. Very, very nice. 3 minutes till the market open. Google, what's Google doing? Google's going to be down. This one's down a little bit, 155. But I got it at 140. I have a 140. So, again, if you're looking at cash kit puts and how they work, basically, the idea behind it is that I have a Google cash kit put here. Basically, I would be buying 100 shares of Google at 148. If it goes above that, I keep the premium and call it a day. And if it goes below that, I can just buy the shares at $148 per share. Right now it's at 155. So basically, you're buying Google at a discount. Company I would love to own long term. I made a whole right about where I think Google is, where it's trading at, where it can go. So you get a nice little indication as to what it is that we are doing as a result. And again, hopefully, if Nvidia is still down, Nvidia is still down. Let's see what it opens up at here. 2 minutes till the opening bell here. Hopefully you guys are enjoying your Wednesday morning. We'll watch the market open for about a half hour, and then we'll kind of go from there. So, again, if you're new to the channel, welcome in. Any minute you've given me of the day is very much appreciated. And again, here's my 4% I'm sitting on right now, and I'm getting $31 this month. I get paid out April 30th, and again, I'm going to get a lot of cash here, so it's going to be great. Let's see what happens in a minute. This music is so relaxing, even though like money's probably moving in this market like it's nothing. Are we gonna pump? Pull up trading view here. Let me see. SPY. No, it's not pumping. Oh no, it just keeps going down. It's like, hey, buy the dip. Nope. Hey, buy the dip. Nope. Hey, buy nope. Like it just keeps just going. Just keeps going and going and going. Market opens about 40 seconds. Welcome in. If you're brand new to the video, feel free to like the video, subscribe, watch Fringe Financials content. If you want to take a look at what the channel looks like, here's what you're getting for a free subscription. Financial knowledge everywhere, every single day. Not every day, but a lot of financial knowledge here. So feel free to subscribe to the channel. Thank you so much for tuning in. All right, market opens in 10 seconds. I want to see what the market does at the open. Let's take a look and see. All right, market's open. Let's see what happens. Ooh, big green candle there. Interesting. This takes a while for like options to update sometimes here. Oh yeah, this is all right. So this makes a good amount of money here. That ain't too bad. It takes time for the options to update in the trades here, in my opinion. What's NVIDIA doing? Oh, NVIDIA gets a big green candle. People are buying it up. They're like, ooh, dip? Yeah, a discount. That ain't too bad. Let's go back to the SPY. See what the SPY's doing. If you want to look at any tickers as markets are moving here, feel free to drop them in the comment section as per usual. So Google one is down, agency one has made money, Bitcoin has made some money. The VIX is up a little bit. Not crazy amount. Up $14 today. Still down $36. This VIX right here, I know Johnny Rotten, if you're still here, this VIX right here for me is more of my hedging for long term. It goes out till June 18th, as you'll see the expiration date there. So that's hopefully going to hedge it in case we get some crazy more volatility. We maybe hit a recessionary period again and data comes out and people freak out. So I had that more of as a hedge. The Google one is just a little bit down. So getting down about like $100 on this one, but I'm not too worried about it. SPY is down 0.9. NVIDIA. Let's take a look and see what is going on in the market. We have Jerome Powell speaking at 1:15 today, so that'll be very interesting as well as to what it might possibly mean for everybody. Yeah, see, look how quick this thing's moving. See, it's like up, down, up, down. I'm going to close this at some point. I don't know what I'm going to close it at, but I'm going to close it at some point. The video's getting a little bit of a pump, which means that SPY is probably moving with it. Not that much, though, honestly. Fringe Financials. All right, sorry. I might just close this one, honestly. I might just close all three of them. I could let a runner go, but I might just close these all out and take the profit on it. I bought it at what? So that would be 39. What can I take for... It's just moving so much. Obviously, it's the first like hour of the day, so of course the market's gonna move. All right, I'm gonna get out. What'd that put me up for profit? 39 to 53, 14 times that by the 3 contracts, $42 out of. Ain't too bad. thing just keeps moving. Look at that. Ooh, SPY's pushing up a little bit. Look at this. Let me see if I can get it filled at 55. I'll put the order in for the day. If we get filled at 55, great. If not, no big deal. Let's just see what happens. If it gets filled, great. You know, 55 at 55 is cool with me. Let's see what it does. Oh, look at that. It comes right back down. You need to get filled, get filled, get filled. This thing is just moving. 55 would make a, what, $16 on 39? That wouldn't be too bad. What would you have? You'd have 16 out of 39. What return is that per contract? 41% return. That's pretty good. So you get it filled at 55. If it does, who knows? Come on. We'll wait and see. It's going to just sit there for a little while anyways. We'll see if it fills. What's the video looking like right now? A little bit of a pump at the open. But take a look at like these option premiums here. Juiced. I would love to know. So I'm gonna look for like a 1.5% return right now at this point for me. So like this gives me a decent return. That's a really high return actually. I want this thing to fill, dude. Come on. Fill. Please. Please, for the love. And again, if you're saying like, well, Fridge, you're down the portfolio. I am, but I'm down 0.23 and SPY's down 0.93. So again, a lot less risk. I want this thing to fill, dude. What are you doing? Okay, let's see here. Anything else is going on here again? NVIDIA is rallying. So this is how I'm going to figure this out here. We're looking at about a week and a half out. I want to make like, you know, about 1%-ish a week or so. So a week and a half, we're looking at 1.5%. So, all right, let me do the math here. So, like for example, like this option right here pays you $105 because 100 shares divided by 1,600 times 100. It's 1.1%. So a little bit less risk here. Again, having NVIDIA go to $96 is a little bit of a less risk. So I'm looking for like that 1.5% right now, probably give or take. We can always just roll positions down if we need to. I mean, SPY's is rolling down here. This is what we're going to do here. I'm going to take, let's see here, 136 divided by 9,800. It's 1.4. Now this one, again, obviously, the delta's only 22, actually. It's not that bad. I moved my character out of the way. Woo! Delta 1 of 22 is actually a pretty good delta to look at here. 155 divided by 9,900. That's about 1.5% right there. So this would be a decent contract to look at getting for sure. We shall. I kind of want to let the market play itself out a little bit here. The only thing I don't like is that Jerome Powell speak about the economy, but again, data came out pretty okay. But NVIDIA is a huge troublesome right now. Things like sitting right around my strike that we're looking for. Oh, there goes SPY dumping a little bit. interesting. There's like no pullback on Nvidia, it looks like right now. It's just pushing up. If you're new to the video, guys, feel free to like the video, subscribe to the channel here. We're looking at some potential early morning market movers here before we get out of here for the day. I might have to edit this. May edit this. Let me. Yeah, I canceled it. Yeah. No, I canceled it. I get notifications all the time now. All right, let me put this down at like 0.53. That's probably gonna get filled pretty quick, but that's totally cool. I'm gonna get out now, hopefully. Watch it not get filled now. I brought it down, guys. Hey, hello. Hello. Fill. There we go. All right, we're out. All right. Okay, so that's not too bad. So we're out of that trade there. Made a little bit of money on that one. Let's take a look and see what the trade was on that one since we got filled. So we made. That's all the history there. So 117 up to 159, so made about $42 out of 117. So looking at 42 out of 117, looking at about a 36% return on that trade, which is a very small trade, obviously, but definitely helps out. Every dollar counts, you know. Puts a little bit of money back in the buying power, which is good. Take a look at what Nvidia's doing. I'm waiting to see it kind of pull back down a little bit. Let's see what we're looking at here. So the low was down like the 80s or so. There's a huge buying amount of like $90 or so. So maybe looking at Nvidia might be not too bad of a trade. Don't really know. Nvidia just keeps rallying up. The only thing that's going to be interesting to see what Jerome Powell comes out and says, right? Because Jerome Powell comes out and says like something about like whatever. So I might open up one option on the video and then leave some cash in case something else happens. Let me see. I'm going to go about 9 days out here. So we're looking at Nvidia at around, I think it was like $98 or so. Let's do the quick math here. 135.
The most important part is the one you need now, and the best partner is the one who can deliver. That's why millions of maintenance and repair pros.
Oh, it might be this one.
Because we have professional grade supplies for every industry, even hard to find products, and we have same day pickup.
So this one you're looking for. If Nvidia comes down about 8.5%, you get Nvidia a discount under $100.
To help keep you up and running.
Or it comes down about 7%. That ain't too bad. It looks like Nvidia's getting some momentum there. So let's do one of these. Why not? 1.48. Let's get this in there. Collateral goes away. Really? There we go. All right, we're in. Okay. So it'll be a nice little trade there. Again, the buying power is going to go down a little bit here, but we're looking at Nvidia. Hopefully, you know, gives myself an extra $150 or so, which is great. So not too bad. Got a 148, but now watch. Investors that open up that trade, Nvidia's going to come to crashing down. Imagine. Only time will tell. I'm going to keep some cash on standby just in case. So there's the buying power updating there. Well, not updating here for whatever. Oh, there it goes. So we got some money. We have some options here that are looking at in case we get a nice little bit of a market recovery today, which possibly is a possibility. So here's how the way I'm looking at my portfolio here, right? These are hedges for these to go up higher. These will go lower. Then I make money on them as I own the shares. These are hedges in case the market gets a little bit of a rally. And this is also in case the market gets a huge dip here. These are just kind of there just because they're there. But like this is hopefully to print out, because what will happen if we get a huge pump in the VIX between now and June? Like, take a look at this. So like as the VIX would go higher and higher and higher and higher, the hope would be, I guess you just type the value in. How nice is that? So if it goes to 60, if it goes, actually even if it goes to 50, right? I still have max profit. So at $50, I'll make, you know, $1,400 about, and I paid like, what did I even pay for this? 120 bucks. Paid 120 bucks. I can make $1,500 if I need to. So hopefully, seeing if VIX gets a nice little pump, we'll see what happens. Obviously, as time goes on here, looks like I bought the top. We shall see what happens. I think I'm gonna call it there, guys. So again, we'll be taking a look at some more of these trades here. So again, retail data comes in better, but still sucks. So we shall wait and see what happens here. We're gonna call it there at the end of the stream here. So thank you guys so much for watching. As I always appreciate every single one of you. And if you're watching this video playing back afterwards, also feel free to take a look at it and feel free to subscribe to the channel. Free Financials, as always, signing off for the day. You guys enjoy the rest of your day, and I will see you guys in the next video as per usual.